Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and it is Friday, September 18th. So, busy week concludes. That is the theme of the day for me. Busy week concludes. See below. What am I talking about? Well, we had a lot of things go on this week. We had, of course, today was quadruple witching. Don't forget, we had FOMC as well. That was this week. We had a busy week of IPOs, and and then of course, this is a seasonally weak time of the year, and I think next week is also a very, if I'm not sure if it actually is the week, supposed to be the weakest week of the year next week. So buckle up for next week. But I'm not 100% sure of that. I did hear that, and I believe it's the between the two Jewish holidays. So Rosh Hashanah to Yom Kippur, right? I think that's the old Wall Street saying is sell Rosh Hashanah, sorry, and by Yom Kippur. I believe I'm really butchering everything here in this one, but I believe that's what the saying is. We'll see if that actually happens. Obviously we've gotten now. It's been 3 weeks of a move down. So I did not sort this. Let me sort this. But we've got 3 weeks now of weakness, overall weakness on the tape. I know that there's been, we'll talk more about the rotation and, all of that's been taking place, a rotation more into value, into materials and so forth. But yeah, you could see some of these areas that got hit today. First of all, a lot of areas got hit today. So it is tough with the rotation. I've been talking about this for the last couple weeks, but, these rotations into value are particularly painful because the rotation out of growth is such a bigger weight in the indices. And I think a lot of what we're seeing is, pretty decent index selling, and that's either in ETFs, but just, a lot of just selling across the board in those major indices, right? Because even if you're seeing the rotation into value, they are such a small weight in the indices. They kind of get hit too if there's across the board selling. So I know that's a tough concept to explain, but I've been talking about that now for a couple weeks. But I think that's really some of which, and I think really what we have is a combination of factors, right? I think that definitely the weak seasonality is part of it. It just seems to be Septembers are always difficult. We certainly have talked about that in the last couple of weeks. And I think, what Jim Cramer's been saying on his show, I know some people don't like Jim Cramer, some people do, but he's been talking about, he does have experience and he does know what he's talking about. And all these IPOs that have been coming out, that causes investors to big funds have to sell some of their existing positions to make room for those IPOs. And there's certainly been a full calendar of those. So what does this translate to? Well, we're going to look at some of the indices and we'll look at this week's performance, and then I will give you my conclusions. But there wasn't really much that outperformed today. Biotech, interesting. So there's not a lot of things that are besides the things that you've been hearing about, right? The selling in tech and in growth. But there's also some decent things going on. And I think once the selling kind of stops a bit, in terms of the overall indices. And again, part of that I think was quadruple witching as well. But I think what you're going to see is that things will settle down. Do I know when that's going to be? No, I don't. Do I know what to look for? Yeah, I do a little bit. So let's talk about the let me bring up this week's performance. But yes, I did want to bring to your attention about this whole index selling. Take a look at what happened today. So we'll come back to this weekly chart here in S&P, which I think is interesting. But if you look at the Qs for today, right? Let's look at the 5-minute bar, right? Obviously, or Nasdaq. I guess there's a funky looking bar there, probably because of the SQ today, special quotation. But right from the start, right from 9:30, as soon as market opens, we're selling, right? And we're selling all the way till about 1:30 today. So that tells me, and again, if you look at the volume, right, and if you look at the volume, in over the last couple days, volume is always bigger on distribution days. It just is what it is. That's how the market works. There's always heavy volume on distribution on days where they're selling. So that's number one. But if you look at this price action, right, look at some of the names that are not in these indices, right? Look at Zoom, right? I played Peloton late in the day, right? Do you see the difference? So that's how I kind of can deduce that a lot of this is just selling in the indices, right? If these names are not in the indices and are doing this, it just tells you that some parties, whether they're insurance companies, whether they're pensions, whether they're RIAs who are doing this index selling, they're kind of right now, who knows? Maybe they're also making some adjustments for the election, right? They could be worried about the election, but they're not selling these names because these names are not in the indices, right? Does that make sense? They're not in the S&P 500. They're not in the Qs either, right? So I think what this kind of can help you conclude is that let this move play out. We don't know when these guys are going to be done selling. Maybe it's another week. Maybe it's 2 weeks. We don't have enough information that is going to say. So I get a lot of questions in the trading room, in the Tribeca Trade Group trading room. Hey, what do you think? What do you think is going to happen on Monday? What do you think is going to happen, or what do you think is going to happen tomorrow? I don't know what these guys are doing, and I do know we have levels to trade against, but we want to make sure that this type of selling is over with. Right? And the example that it's very fresh in our minds from back from in March, right? We don't now, again, this does look different. And again, I've been showing this, this area, this June. I think this looks more like June and some more similar to what we saw in June versus what we saw here. But we don't know the extent, right? I would like to see us hold the bottom of value next week, right? We did close below the 50-day moving average. Does that, concern me that much? It's not great. It doesn't give me a warm and fuzzy feeling. Does it mean it's game over? No, I don't think it does. But we do have to stop seeing the selling. We have to stop seeing all these sell programs that are washing through that, and we don't know when that's going to happen. So I would like to see 3267 hold next week, and we'll see if that takes place. And we don't really have any more information than that, other than we are seeing some other areas definitely showing some relative strength. So that's what I'll be watching next week. And if we break that, then there's this VPOC that we have to worry about. So we'll kind of see how this works way through. And I think the best medicine going through something like this is something that you've heard me say in these videos for a while now, is less hardly any option positions, unless you're using them to scalp intraday. And less overall positions, right? Lightening up on risk. That's the best medicine for these bouts. And then, of course, if we do something like this, right, where we really start to break down towards the 200-day moving average, then it's really lightened risk, and having some hedges on. I did that a little bit today. I've done that a couple times in the last 2 weeks. Not many where I've traded some puts, but it does help if you can kind of get yourself accustomed to trading both sides of the market when they're moving to the downside pretty quick. So we'll keep an eye on that. Also, if you want to look at this weekly chart, this would be a nice area. If you look at this weekly chart, this is the Venom, R1 Venom on the weekly, which is an extension away from this year's value area. Remember, I'm on the weekly chart, so this value area is for all of 2000. So this is an extension away from the value area. And notice that we're kind of holding it. So that's somewhat constructive there. But again, like I said, it's somewhat constructive, but these indices are moving too fast for us to call a bottom or anything like that. The performance for the week, I think you'll find is pretty interesting. First of all, I have the last couple weeks in here for you. So just to confirm that this is the third week, down 2.4% 2 weeks ago. Last week down 3.3%. This week down another 1% for the week. And where it's really evident is in the Qs. Down 3.1%, down 5.9%, down another 1.3% this week, even though we did see that bounce in the beginning of the week. Also, IWM, a little bit different here. Positive for the week. Maybe that is something that is a little bit of silver lining going into next week. That small caps had a nice week, and you could see also the international areas did better this week. EEM was up 1.3% for the week. Gold and silver continue to be. If you look at the last 3 weeks, gold. Not gold and silver. Gold and bonds. Right. I know people like to put these charts up of like ratio charts where they put like GLD over SPY and they talk about this relationship. Unless you're playing those things one long, one short, that's really not going to work for you. These ratio charts that people love to put on Twitter, because I don't really want to be long gold or silver right now until it gets out of range. So look at the performance 2 weeks ago. One was up, one was down. We're talking about 1%. They flipped again, right? They flipped again. Well, not TLT, but we're talking about up 1.1% the last 2 weeks and the 2 weeks before that down 1.5%. These things are not moving. So I know people keep looking for trades and keep trying to paint a picture about what gold is doing and so forth. But I'll tell you, these things aren't moving. If we look at gold, and I will continue to watch it because it does look like it's putting in some type of consolidation. If you look ahead to October, right, maybe it will move decently once we kind of get out of this range. But this is a big value area, and maybe it just needs some more time. For now, I don't see a trade here. Same thing with bonds. But again, it doesn't mean it's not going to reveal itself, if you give it more time. Same thing with bonds. Look at how tight the range is. Look at the developing value area for October and how tight this is, right? So nothing. This is not. This has been a waste of time for the last few weeks. So we'll continue to monitor it and watch for a break. All right. So we talked about a little bit about gold and silver, and of course, I'll talk more in detail about these. In the Tribeca Trade Group macro and watch list. We'll talk about this week's watch list too as well, which outperformed nicely. So S&P down 1%. What performed well? Interesting that biotech. Biotech of course got off to this really nice start in the beginning of the week because of the deal, the IMMU deal, and then it just kept on running. This week. So overall, biotech was up 6.7%. I have to say, I missed this trade. I didn't, follow it on Monday, but you could see, this was your best performer for the week. Also, metals and mining, right? Very strong. Even though there's a lot of gold miners in this particular ETF, but again. I know XLB got a lot of attention this week. Interesting, nobody talked about it today, down 1.7% today. Gave back some profits today. So, kind of interesting. All right, we talked about how many times it was mentioned on CNBC yesterday. I'm not sure if that means the trade is over. We'll see, right? But everybody now talking about materials. What happens when everybody does that? It goes down 1.7%. So, let's move on from that. Obviously, did have a nice week there. And then the Fang stocks were your worst performers. Again, a lot of things going on there. I could probably spend about 5 or 10 minutes talking about the Fang stocks and growth stocks, but we already talked about one of the logical reasons for that is because of the IPO, and so forth, and just straight up rotation. All right, so kind of a mix of sectors there. You can see energy stocks outperformed for the week too. XOP oil and gas up 6.5%. I played a little bit of that stuff for a day trade. Again, I can't really fathom staying in energy trades for that long, but they did have nice performance for the week. All right, so let's move on. So S&P down 1% for the week. How did our watch list do for the week? Our watch list that we put out for Tribeca Trade Group members up 1.8%. So that's another week of outperformance. I will start tracking this now. If you're not familiar with what we're doing with this, every week I go and I buy this list on Monday morning, right? So whatever list I come out with on Sunday, right, and I put the video together and all the trade setups for members, I go out and buy this as a portfolio trade on Monday morning, and then what I do is I unwind it late in the day on Friday, and I move over into SPY, like basically a beta play, and I own SPY through the weekend, and then I unwind the SPY on Monday and go into the new watch list. So far, so good for this. It's been a new experiment. I didn't think that when I started developing these weekly watch lists that I was going to actually trade it. It was just an idea that we came up with a couple weeks ago. But I will start tracking this performance. I realize that it's very difficult to kind of track the performance, but I will start taking screenshots and putting them, because I think, and if you've watched my videos, you know that I've talked about this, but I think I've outperformed the S&P, I think 7 out of 8 weeks or something like that of the last. So I will have something more concrete than saying I think that's what it is. I will make sure that I'm tracking this every week, and then we'll put together some numbers, to see how this moves, and it may be, obviously we're getting to the tail end of this year, but this is kind of like the trial. I'm starting this up towards the second half of 2020, but I want to keep with the strategy, and keep doing this trade because it seems to be working. So in something that works, I'm using the Market Webs indicator for a lot of the setups. I'm doing when I do my homework, I seem to be getting it right. Knock on wood. So we'll continue to kind of look for this nice performance and go from there. So again, that'll be, if you're not a member of Tribeca Trade Group, where do you go to sign up to kind of get the watch list, as well as you can get all my my macro views, which again, I think we've been pretty spot on with what we've been talking about over the weekends. But you can click on the link here, and here's how you can get involved. And I would say check it out if you're not a member of Tribeca Trade Group. So let's move on. Let's talk a little bit more about some things to watch for next week. All right, so we'll just talk about the S&P one more time here. This 3264, right? We're going to need to kind of hold that. For the Qs, it's going to be a little bit of a different picture. Bottom of value. Oh, I didn't go through today's trades. I knew I forgot to do something here in this video. But 2.6, we did hold the bottom of value. So, that's a nice kick save. Does it mean that the selling is over? We don't know that yet, right? And I could tell you one thing. Things are starting, I'm starting to compile that watch list of things that I want to buy into this, besides the names that are showing relative strength. Eventually, again, I'm not making any predictions, right? And some of these charts kind of look busted here, right? We've got a pretty decent breakdown, and they could go sideways for a while, after breaking trend. As much as I like PayPal, and I tried to trade it a bit this week, it has broken a little bit. So it could see a whole bunch of things. But you do have a dip now, and we're just going to have to assess this and kind of watch some of these things. A couple other names that I had my eye on. CrowdStrike actually held up pretty decently. So we'll see how this materializes. We talked about Peloton already. I did trade that. I'll show you the trade blotter for the day. I talked about as well, where did some of these things end for the day? Let's see if I have this up. Oats. So, right, it's all the oatmeal that everybody's drinking. Oats finished above value. So again, these commodity plays, if they've got the momentum to them, wheat is another one, right? Went all the way up to this VPOC up here. But, what's the way to play this stuff? I think I added a trade in Mosaic today. Wow, look at the vol. Oh, it's of course quadruple witching, so you're going to see volume and everything. This is not how I wanted this candle to end the day, so I'll keep an eye on that. My stop will be 1880. Deer was another name that I took another target in today. But if these type of material names are going to continue to run, I'm going to have some exposure to them. R is another name, Rider Systems, that I got long earlier in the week that I took a target in. I tried some of this BMRN and I got stopped out on it. I exited my starter earlier in the week in Qualcomm. I did take a target in that one. And then I did, I think right now for me, while this market is moving fast, and if I look at the names that I've had the worst performance this month, it's been in options. The trades that I've done better in are my stock plays. So, you know, I think that's the way to kind of play until the volatility subsides a little bit. So I think that'll be kind of how I'm looking at this market a bit next week. All right, so I'll leave it there. There's a lot more that we're going to go through, obviously, in the weekend, but in the weekend videos. But for now, let's relax, have a beer, and maybe watch some football too this weekend. All right, guys, have a great night and have a great weekend, and I'll see you guys on Monday. Thanks.